I gave you a brief outline about the Indian financial system and how it works. It's a system where money is, or savings are, savers and users of funds meet. Okay, savings are allocated to users of funds, and this is done in a systematic manner. And there are also regulators in a financial system. So we will proceed to financial system and what are its functions. Functions of a financial system, it first mobilizes savings. When I say mobilizes savings, before that, do you see my screen here? Are you able to see my screen here? Please type out the response in the chat box, or at least respond.
Yes, ma'am. Screen is visible.
Okay. So, mobilization of savings, wherein financial system says that if you have excess money, park your funds in financial institutions, and these will be used for the purpose of economic development by way of providing capital to people who are entrepreneurs or who are individuals who need money. So you are able to have access to others' money in times of need, for which the savers earn a return and the users also pay a cost. That is what we mean. Like when savings are mobilized, household sector and corporate sector saves through use of different financial products. For example, we have the bank deposit, mutual funds, savings deposit, equity shares, etc. So when I have excess fund, my income is there, expenditure is met, and whatever excess I have, surplus I am going to park it in an avenue. Park it in an investment avenue. It could be bank deposit, it could be mutual funds, or it could even be post office deposit. All these are investment avenues. I can park it in any of these. These funds are going to be borrowed by somebody who needs funds for time being, and then they will pay a cost on it. That cost will be given to me. Are you following? So that is what it means. So when I say my income minus expenditure, are you able to see this box?
Yes, ma'am.
Yes, ma'am.
Is equal to savings, and this savings is going to be converted to investment when I park it here. Because investment, because it is useful for producing goods and services. It is used for production of goods and services, and it is used for economic development. Also, it ensures liquidity. Liquidity means anytime I can have cash. If I need funds, supposing I'm buying a house and I don't have funds with me, I always have financial institutions which lend me money. So where do these financial institutions get money from? They get it from people who have saved their money with them. Those money is treated as deposit by them, and this money is being lent to me when I need, right? Same way, if corporates need capital, it is through these kind of institutions. They can be through mutual funds, they can be through direct equity, that I am buying their shares, I am giving them capital to operate. So, ensures liquidity. It provides liquidity in respect of many financial assets like equity, debt instruments, etc. And then this encourages investors to invest in financial assets. So before we proceed, what is financial asset? What is financial asset? I'll explain it to you, financial assets. And then this encourages investors to invest in financial assets. Indirectly, this helps corporates to raise funds from financial markets through issue of financial instruments. The financial system ensures liquidity for many of these financial assets through strengthening the secondary market. Now, before we go to primary market, secondary market and all, certain terminologies we need to understand. And what are these terminologies? I will start with our financial assets here. So financial asset is different from your physical asset. A house can be called as a physical asset. Your gold ornaments can be called as physical asset. But financial assets are financial instruments like equity, debt, etc. Because what is equity, debt? When I invest in an equity share, when I buy an equity share, let's assume simple case. I'm buying an equity share of say Reliance India Limited. So when I buy this, I'm going to have an instrument with me, right? It is an investment for me. But my money is going in as capital to this organization. And with the capital that I give them, they will buy various assets. They may buy a premise to conduct their operations. They may buy a machinery to produce goods and services, etc. So my asset, my money is given to them, and that is being used as capital to create more assets. I hope you understand. That is what is called as financial asset. Whatever I hold is a financial asset. I have given capital by way of ownership. I've taken part ownership. Shares are nothing but part ownership in company. And I've invested in equity shares, or I have invested in debentures by lending them. I've given them capital. With my capital, they are going to buy some asset, maybe an equipment to produce goods and services, maybe a premise to conduct their operation, right? So these are all the ways to, the way by which financial asset can be described. Physical asset, with that you cannot create more asset. With a house, you cannot create more asset. But with a financial asset, you can create more assets because it is being put to productive use. You're creating goods and services. And this indirectly helps to corporates to raise funds from financial market through issue of financial instruments, which means that, see, you can never think, I don't have the money, how can I start a business, right? Somebody says you start a business if you've lost your job. I don't need to worry saying I don't have money. Where will I go for money? Today, if you see, money is liquidly available. You can go to any financial institution, they will lend you money, which means I have access to somebody else's money also at a cost, because I'm paying some interest. That is why I say at a cost. And this person parks his fund because it is safe for him. Financial system ke through, if you're investing, obviously it is safe. Secondly, because there is a regulator sitting there and watching you with his eyes open, right? So it is safe, plus he is earning some return also on it, on the money that I have parked. And thirdly, when you say, it encourages liquidity in the economy. Anytime I need, I don't need to worry about funds. If I need to buy a house which is costing me 50 lakhs, I don't need to sit and worry, because there is always financial institution. Nobody has 50 lakhs. Middle class people, we generally don't have 50 lakhs on hand. So we can always think, okay, with a loan, I can definitely manage. That is what I say, it ensures liquidity. Anytime you can get cash. So moving on. And then settlement of commercial transactions. When I say settlement of commercial transactions, it talks about financial system facilitates settlement of commercial transactions and financial claims arising out of sale and purchase of goods and services. Like, for example, when you are using money, you are giving physical money and settling. But when you talk about having, just a second, I'll remove this annotation. Yes, sir. But then, now if you see, all values are settled by way of over a period of time. What has happened when you didn't have liquid cash? You always had instruments, checks, bill of exchange, demand draft, credit card, and off late letter of credit if it is going to be a export-import transaction. And it is going to be bank transfer is also an important instrument. You don't need to have physical cash at all. Today, if you see, there is virtual money everywhere. You don't need to have cash. Money in your bank, it is only the electronic entry. That is why if you see, money moves fast. Today, if I want to send money to US, I can do it within 5 minutes. All that I have to do is take out my mobile phone. I can install my app. I can install, banking app. I'll key in my account details and I can transfer it to the other person. It reaches in on the same day, same time. I do real time basis, we call, right? This is also helping me in settlement of commercial transaction. So these instruments are recognized by law as a substitute for money. So as I said, we don't have physical cash moving at all. Bare minimum is physical cash, and it is all virtual money that is being used all over. Are you able to follow? I hope you're able to follow. And then instruments like credit card, debit card, as well as new facilities, internet banking, mobile banking for settlement of business and commercial transaction. Today, even retail shopkeepers, they say everywhere, if you see, we accept Paytm, we accept Google Pay. You will see these things. So you don't need to carry cash. And the presence of strong financial system helps the government frame appropriate economic policies for increasing savings and investment. If there is a system, I told you there is also a regulator. And if there is a regulator, people feel very safe to invest. Regulator's job is to protect investor interest. And therefore, he feels very safe that there is somebody watching over what is happening to my money. And if there is a regulator, and if I am a company operating under a regulator, I also feel there are certain rules and regulations I have to abide by, and I will not act the way I want to. So I'll be very careful when I deal with other people's money, right? And it facilitates government borrowings also. Like for example, if government wants to borrow, I can issue a bond, right? And any kind of loan I want, I can take. This is because in case I have a planned budget. Last time in the macroeconomics part, we saw what is a planned budget. I will forecast my expenditures. I will estimate my expenditures, accordingly levy my revenue. And when I feel I need to construct an infrastructure, like say I want to construct a flyover and a metro, and I don't have enough funds, I'll take it from people as loans by issuing bonds or by issuing many other instruments. So government also to attract foreign capital, like for example, if there is a regulator or if there is a way you are doing things systematically, if you do things, automatically foreigners also feel safe and they also want to invest with you. Helps to manage risk in transactions. On account of deregulation of financial markets, participants are exposed to market risk. Financial system offers various financial products like derivatives. Like when I say deregulation, it talks about relaxing rules and regulations so that everybody can participate, everybody can hedge, etc. So they have introduced instruments like derivative products, which we will be seeing as we go on with the topic or with the subject. Derivative is a special instrument which is introduced. We'll see what it is. And it's a hedging instrument. And next, to have an overview of role and segments of financial markets, etc. To manage risk in commercial transactions, players who are a part of financial system use variety of derivative products or contracts like futures, forwards, options, swaps to manage variety types of risks in commercial and business transaction. Like for example, if I'm constantly investing in stock market, right? You know it is very risky. You've heard from people saying, I will not invest in stock market because it gives there is a lot of risk involved. Therefore, I am introduced to instruments like derivatives. These derivatives are contracts wherein I'm able to hedge the price of the asset at which I bought. What is the risk? Some uncertainty happening. my asset losing its value, the value at which I bought. I don't want it to fall from that value. Supposing I bought an asset at 20,000 rupees, the asset's price moving to 22,000 is not going to worry me. But if the asset's price falls to 18,000, that could also happen. So I don't want to face that risk because it's a loss for me. So I have, when I'm constantly transacting in market, to encourage my constant participation and people like me who are participating constantly, introduction to instruments like derivatives are there. Some of them are forwards, futures, options, swaps, etc. We'll just have an overview of Indian financial system, where we speak about financial markets, financial intermediaries and other participants, what products they offer and who are the regulators, right? So we are going to say like any other financial system, Indian financial system also has a regulator, financial markets, financial intermediaries, and instruments regulators. What is a financial market? A place where buying and selling of securities happen is called as financial market. And then financial intermediaries are those institutions which facilitate this process of buying and selling. They act as an intermediary between saver and user, middleman between saver and users. And financial products and services are going to be, it's going to be like they have call notice, treasury bills, etc. For short term, financial services are basically they are providing service of parking your money for short term or borrowing money for short term, parking your money for long term or borrowing money for long term. And instruments generally are call notice, deposit receipts, right from your check to the most complicated instrument like derivatives. And then we have the regulators also associated. I will tell you in detail about this. We will have a discussion on this in detail. Now, actions of buying and selling, where buyers meet sellers, then we say a market is created, whether it is goods market, commodities market, or if it is going to be vegetable market, fish market, whatever. Buying and selling is taking place. That is why it is called as market. Demand, people who demand and suppliers meet is going to be called as financial market. So now, if it is going to be financial market, it is going to be a virtual market. When I say virtual market, it means that you don't need to have a physical place where buyers and sellers meet. If you see stock market, everything happens online. Even on your mobile phone, you can key in your orders. Some other order, it gets executed and comes. So now what happens is, that is a virtual market. Over the phone, when you buy something, and somebody sells something, money gets transferred, things get delivered, then also it is a virtual market. Today, if you see, even my garments, all I'm doing is I don't need to go to a store and buy. Everything gets transacted. It is getting couriered to my place and I am paying through my card or whatever. Money gets transferred. So buying and selling happens here also virtually, right? So when I say a market, it means buying and selling is created. When buying and selling of financial services takes place, like for example, if I'm going to buy and sell services, it is going to be, I'm going to be buying and selling financial services in the sense, when I want to borrow money, I have to borrow it at a cost. I need to pay them some money. I am using somebody else's money for a time period and I'm going to pay them some amount for using that money. So buying a financial service. Somebody else has parked their money with the bank. Again, bank is giving you a place to invest your money against which they are paying you an interest. So bank has sold the service of investment. Bank sold the service of borrowing to me, right? So it is called as buying and selling of financial service. Even if you have a fixed deposit with the bank, it is called as financial service, right? Any service on finances given to you. is called as financial service. Right from your savings deposit in bank to any other service, complicated service like hedging your transactions through derivatives is called as financial service. Financial intermediaries are those institutions who facilitate this. They are middlemen between savers and users. Like you have your bank, insurance companies. We call them as AMCs, mutual fund corporates, bola to AMCs. Then we have individuals also. Then apart from that, when I say participants are dealers, institutions, companies, individuals like us are all participants. Whoever is investing money, whoever is borrowing money, whoever is intermediating the service, whoever is regulating the service are all participants. And whenever you deposit money, whenever you invest money, you get an instrument or a receipt against it, which is called as financial instrument. When I place a savings deposit with the bank is going to give me a checkbook or a debit card, or at least they are allowing me to use the withdrawal slip, right? If it is going to be any kind of, say, complicated instrument like equity share, we are going to credit it to my demat account. And demat also, they give me a slip, right? Now, when I talk about regulator, money part is regulated by the RBI, and equity market, capital market is all regulated by my SEBI. And then I have Clearing Corporation of India Limited, which regulates the foreign exchange transactions, currency movements. IRDA regulates the insurance part, right? So we will proceed with money markets, capital markets, etc. For now, we saw about what are the objectives of a financial system. Then we had an introduction to financial components of financial system, and then we are going to speak about financial market. Each component I just described verbally with you, and I've shared the screen with you. So we will directly go into financial markets now. So I'll start a new meeting here.